G'day everyone, welcome back to Pete's Investing. It's been a while since I've been online with you guys. I just spent the last month in August on the Greek Islands and also in France, tasting the food and just relaxing. But finally back now, start of September. I'm going to go through some more trading ideas for you. So let's get started. First, let me explain what indicators we're using. We're using the RSI 14. That's this chart, this indicator here. Using the MACD 12.26.9. We're using the Stochastic 14.3. And we're using the CCI 350 with the moving average applied to it. And I'll go through what each of these, how we enter and how we exit the trades on each of these. But first I want to show you what that looks like from a distant view. So this goes back, this is looking at a 4-hour chart. So these are the 4 trades. So what we're trying to do is we're trying to pick the where to enter at the troughs of each of these trades. So let's look at that in a bit more detail. So if I minimize this screen and maximize that one, there are 4 trades. This one's still open at the end here. As you can see here, we entered one lot of shares at the trough there. The price went sideways. We only entered the one trade, the one entry, and we exited the trade there. This one, we entered 2 lots there, another 1 lot there. Price dipped and then it started appreciating, and we closed out those 3 entries at that point there. This one here, we entered 4 lots there. We entered 5 there, and we closed those 9 out at that point there. Now where we average, this one didn't average down, this one averaged down. Again, we don't use stop losses, we use average down approach. But the one thing I just want you to notice in this particular chart, it enters mainly at the troughs in most of these. Now if I drill down, it's a bit hard to see on this one. If I drill down on that, you'll notice the price dipped into the trough there, and we entered a lot of shares there. Another couple of troughs there we entered until we finally exited that trade. Price went sideways and it appreciated, and we exited those 9 trades at that point there. And this one likewise, we entered a lot of shares there on the trough there, just when it started appreciating. The trough there, and another lot, one lot of shares there. And we exited, where did we find out? Up there. We exited those 3 lots of shares we entered there. So what that looks like when we look at the profitability chart, you can see there on that average down approach there, we closed out a profitability at 6,860, and the profitability opened up at 2,582. So it made a nice profit, even though it dipped. A bit of a drawdown happened there. It closed out with a nice profit. This one we closed out at the profit there, as you said, with 2,582. We opened up at 1,486 with 3 lots of shares entered, or contracts. This didn't average down, it used only 1 contract. Again, like we said, 1486 it closed at, and it opened up back here at 1064. And another little 1 average down happened here. So how does this work? How do these indicators apply? So let's drill down on this simple entry up here. So that's just this price chart up there. We don't really look at that. All we look at is these 4 indicators. So first of all, the RSI 14. The entry parameter for this one, when the RSI is less than 50, that's all we care about. That black line is the 50 line. So when the RSI 14 is below the 50, that's our first parameter. Second parameter is the MACD 12.26.9, and we look at the MACD line. The blue line has to be above the red line, and the MACD blue line must be below 0, and that there is the 0 line, the black line there, the flat line. Then we look at the stochastic. So again, the red line is a stochastic K. that must be greater than the signal line, the stochastic D line. And that also must be less than 80, and that's the 80 line. Lastly, we look at the CCI 350. That's where the pink line breaks up. It has to be less than 0, and the 0 line is this flat line. So that pink line must be less than 0. And the pink line must be greater than the moving average 16. The moving average 16 is this slightly curved black line. And that moving average 16 must be below the minus 200. So if you apply all those, it generally picks the very bottom of the, if you look back at these, it generally picks the troughs of each of these entries. So again, it picked the trough there, there, and down here, and it closed out near the end there. So that's the entry parameter. Now when we close the trade, let's look at a simple close on one single entry there. It's basically the opposite. So looking at the RSI must be greater than 50. That's the 50 line, is the black line. The MACD line, which is the blue line, must be less than the moving average 20, the red line. And that must be also greater than 0, and that's the 0 line. The stochastic red line must be below the black line. The stochastic K must be less than the stochastic signal line D. And that must be greater than 20. 20 is this black line here. And lastly, the CCI 350, the pink line, it's a bit hard to see there, that must be greater than 0, and that there is the 0 line. And the pink line, the CCI 350, must be less than the moving average 16. And lastly, the moving average 16 must be greater than the plus 200. That plus 200 is the solid black line there. That's our exit criteria. So again, it looks a bit messy when you look at the all the 4 indicators, but what it's actually trying to do is pick the troughs. So pick the trough there, closed out there, pick the trough there, average down close to another trough there, and it closed out those 3 trades there. There were a few troughs in there. If I drill down again just to show you on this one, there's a trough there, a bit of a trough there, another trough there, and it closed out those multiple trades. And on this particular chart, this particular trade is still open. So pick the trough there, and it's still open, and we haven't closed that out yet. So where does this new program fit in amongst the ranking of our programs? So this is the program we ran today, and we showed you the FTSE profitability and drawdown. The total profitability for the FTSE was 68.60, a drawdown of 88.03, and that gave us a profit over drawdown percentage of 78%. Now these are the other indices we tested, and the total revenue from those indices was 76,526, with a total drawdown of 77,807, and that gave us a average ranking of 10, or 170% profit over drawdown. So that gave us a ranking of 10 in amongst our programs we've tested so far. And again, if you look back on some of these programs in the previous videos, you'll find those. Some of the CCI 350 strategies. There's a few multiple CCI 350 strategies in there. Some Elliott Wave and Ichimoku and Super Trend and so on. I also tested a sample number of shares, and you can see there the share types we tested and the revenue generated from each of those. The drawdowns for those respectively, and the profit over drawdown percentages. You'll notice this latest program returned the highest ranking so far in our program testing, and again that was tested on the daily chart. So not a bad result overall in terms of profit over drawdown, and not a bad result in terms of revenue and impact on the drawdown perspective. Okay, that's the MACD, Stochastic RSI and CCI 350 strategy with an average down approach. If you like the channel, hit the subscribe button, the like button, and we'll see you in the next video. Thanks guys.